Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, February 24th. Okay, really wild session yesterday. Really wide range, very volatile. At the end of the day, prices bounced hard off of the lows and went up to fill significant gaps above, which is, technically kind of what you'd expect. When we have gap down openings, we always talk about in the morning, pre-market, be ready for them to, gun it off the open and flash gap fill above. And that's where it traps a lot of people, off of the open, seeing the big down move, and then they get short as soon as the market opens, and then they gun it up to fill. That didn't happen yesterday. They took a leg down to some support levels, and then they reversed it and then went hard the rest of the day up to fill those gaps. So really, what that means from a technical standpoint is quite a number of gaps were filled below, open gaps from the recent run up that have been left open. Those have been repaired. And then by filling the gap above yesterday, having repaired that gap, there's very little unfinished business above price at this point where you'd say, wow, are they going to go up and fill that gap? So anyhow, I expect volatility to remain kind of elevated here for a while. Normally, I wouldn't think that this just goes away, from here on out. So I'm kind of expecting some volatile sessions here in the coming days and possibly even into next week. So let's look at the charts very quickly. It's 7:15 as I'm starting the video, a little later than usual. ES futures are flat. Same thing with NASDAQ, pretty much flat. Small cap futures are up about 0.8%, so they continue to outperform. So here on the daily chart, you can see the reach down, almost getting to the 50 EMA, and then coming back up to fill the the gap down and recovering that 385 pivot level that we said was important, and even going up and recapturing the 20 EMA at 386.52. So now, if you're a bull, you want to see price take out, get back above the eight-day moving average at 389. That would put price back above all the moving averages, and that would be really bullish. And you can see that level right here on the 2-hour chart. It's the next resistance level above price. So I've dropped in a little downtrend channel here where price came down to this 381 level. This is where it bounced and then went into the gap and filled it, went up to tag 389, but then closed back down below. I think 387, if you're an active trader today, is going to be a good little pivot level. If it stays above 387, you can look for 389. But if it drops back into this channel, I think you got to look lower down to this 385 that we just talked about as being an important level to hold. And if it's not able to hold that, then it's back down towards 381. Here you can see I've got this expanded view of this little channel. Broke out. We just talked about the tag of 389. Notice that this was the prior consolidation level. So where all this was support before, now becomes resistance at 389. So that's an important level to reclaim if you're a bull. A lot of action in the Qs yesterday. I think I made mention on the recap video yesterday. 4% down move only to see it bounce and recover. Lost the 50, lost this 315 zone, deep look below, then to come up and recapture that. I think on the daily chart here, you gotta hold this 315 zone, or then it looks like this thing is really rolling over. So for the bulls to kind of reassert themselves and take charge again, price has got to come up, take out this 328, which equates to where the 20 and the 8 EMA both reside. So have price come up here, take out 328.50, and then get back into this channel, and then that will kind of negate all this technical damage that has occurred over the last few days as price has come down. But I think the posture is still bearish on the Qs. Why? Because you lost the 8-day, you lost the 20 EMA, you lost the channel, and now you're below all that, and basically sitting right near the 50. So if price were to lose the 50 and then lose this 315, then you're looking at I think a much deeper pullback here. Here's an expanded view on the 2-hour. Not a lot to add. The only thing I'll say here is if you were to recap your active trading day and you say, look, what should I have been keying off of yesterday? Here on the 2-hour chart, there were some other gaps in here that I've taken out that were filled, but you had a large volume over price bar right here. Support, 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 and then you had the top of the gap here at 310.25, tag, 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 right? So when all hell is breaking loose and you get, a little panicky and a little scared and, kind of like, what should I be doing right now? Should I be selling this bar or should I be buying this bar? Always look left for structure on your charts. Look left for structure. Large volume over price bar, that's support structure. Support, support, support. We've had 3 or 4 prior instances where that level is held. And then we've got the gap, support, support, and a tag. So there was some information there that was available that would lead you to believe that you could buy that bar. So in real time, let's look at the 30-minute. Here was the bar, the big reach down bar that went to the top of that gap, right? And what was that level? Yeah, like 312 was the level. On the 30-minute chart, you had a bar here at 314. So on that first reach down bar, you had tagged a support level, you had tagged the top of the gap, then you reclaimed 312 where there was a large volume over price bar, and then you came up and reclaimed this 314. So on an active trader sequence, I think that would have been the most logical place to try and make a buy at right around 314, because it lined up with two time frames, right? The gap and then the large bar on the 2 hour, and then on the 30-minute you could have made a buy here and set your stop down below, and then this would have been disappointing and possibly scary, but you didn't get taken out, and then you got a great follow through push later in the day. Now look, let's look at this a different way. Let's say you missed all this. You got panicky, you got a little bit scared. Things were happening fast. You had all your positions going on. What should I do? And you didn't get any of these entries or potential entries. When you got this push up to here, up to this 319, and then it came back for a back test of that 314 level, that would have been a very, very objective long. And also, that would have been a much less scary long. Why? Because you already had a reference level. You already had a level here with the volume over price bar. You had a level here from these first two candles. And then coming back on a back test where that level was respected, then you could have taken a long at that point. And it turned out you didn't miss a thing. You don't know that when all this is happening. But what you did know is you had a prior low to shoot against that was never violated, and that would have given you confidence to stay in that trade. So, sounds easy in retrospect, but I think, working through that thought patterns after the fact does help breed confidence in the future about things you can look for. And I think that's a nice little saying to keep in mind. Look left for structure. Look left for structure. Look for prior support and resistance points. Look for large volume over price bars where there are, support and resistance levels, and that will help you gauge where you can gain a more secure entry or sale if you're trying to sell. All right, let's ramp it up here. IWM went down to this 217.50 we had been watching, recovered back above the 20, back in the channel. No issues so far. 2 hour time frame. I have dropped in a little channel here. What the bulls want to see is a pop above this 222 level and then get a push up to 226. We can see here that there is a little bit of this gap left to fill. I don't even know if it's $1 right here. And then really to get this going, a break above 225 would send this a lot higher. So there's been some resilience in IWM with the reflation trade. So again, here is a good example, just real quick, of the same scenario that we just discussed on the Qs. Big look below, big scary bar, came up, could not take out the breakdown candle high. Remember that, breakdown candle high. That's what you want to see on a, is this going to break out? That would be a place to buy. Couldn't do it. Got rejected. Came back here to that same level and held. That would have been a confident location to try a long. You had a sizable volume over price bar here, and you had the bottom of the channel as well for support, and then you had that prior low right here to shoot against, and then you got a good push into the end of the day. Facebook, massive bounce. We talked about it yesterday. Came down to tag this 255 area where this had held before, and then it was up the rest of the day. Now, price is in the middle of no man's land right here. I think you got to wait till it either takes out this 268.25 or drops back below this 265 level for an actionable trade. Apple. Nice recovery off the low. Big spike lower down into the 118 area. Came back up, found some support, and then closed the gap. But notice, pretty well-defined downtrend line. Support, 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 support. This is going to be resistance now. See all the levels of support? The large volume over price bars here coming in. If Apple's going to make progress, it's got to chew through these levels above, and I don't think that's going to be easy. So right here against 126.50 or 127, right in that zone, I think you've got an objective short. See how it acts this morning. But I think if you look at all the evidence, it looks, it's pretty weak. You're below a lot of resistance right here in a pronounced downtrend channel. And yeah, it was great that it filled this gap, but now you've got lots of overhead resistance there to deal with. And moving on to Tesla, Kathy Wood was out yesterday in the media saying, I bought a ton of Tesla today, and I guess she did. I think I heard early this morning, it was 127 million in Tesla. But, pronounced downtrend. This 650 level corresponds on the daily chart to the uptrend line off of the March low and some lateral support. So it came down and held that area, but it's got a lot of work to do on the upside. And, if you're a bull, just take it level by level. If it can recapture 700, you can stay long against it. Try to get a move up to 735. If it can, recapture that, then up we go. But at any point here, just remember that, now it's on an uphill climb, and it's got to chew through all these resistance levels in order to make progress. So you're going to have hurdle after hurdle. Not saying it can't happen. Obviously it can. It's already done it once. But all I'm saying is be cognizant of the overhead resistance that's in place. Really, I think the first meaningful level is down here at 735. I don't see a lot. You've got the downtrend line here, but if it can pop that, I think you can get up to 735, rather quickly, and then it'll have to navigate those resistance levels overhead. Microsoft, like the other ones, support, 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 bounce, filled the gap. Now, 236 is your next overhead resistance level. And I think if it can hold 232.50, you can be long. But if it loses 232.50, you're going to probably roll back down here to 230. And you know, if you didn't want to get involved in a big active sequence on Microsoft, I think you can alarm 230, because if it loses this low, you know, loses these support levels, you know, you're gonna find 226 pretty quickly. So it's fine to trade in here actively, but if you wanted to just set yourself an alarm for a potential downside move, I would be setting it just below 230. Amazon, support, 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 hold 3100. Objective long, free 50 club, long against 3100. You're looking for 3150. You got it. Recapture 3150. You're looking for 3200. You got it. So the free 50 club delivered twice for a $100 move, and it's been remarkable. I know a lot of people were probably snickering at the free 50 club, but these $50 increments on Amazon have been working great. So now 3200 is your active pivot. Support, support, resistance, some reactions here as well. Reactions here. Take out 3200. You're looking for 3250. And if it falls back below, if somehow it gets weak today, you're looking for 3150. So 3200 is your active pivot on Amazon. Google. Breakout. Back into the prior trading range. Found the bottom of the range. Lost the range. Into the open gap. Little kickback rally. It's got to hold 2050 in my mind to save this, because now, you know, if you drop down back below 2050, I think you fall back into this big gap here. And I think the only way that falls back is if, you know, the market in tech remains really soft. I think the path of least resistance here is now lower after it was higher. Because, I mean, again, look at how this works. Large volume over price bar, support. I mean, a zillion times. Support, 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 support. Now it's resistance. Look, resistance, resistance, resistance. Tag a resistance and backed off. So if price can recover the midpoint of this trading range at 2070, 2075, then you can look for the top of the box. But here, you know, I would be really cautious if it lost 2050. I think it would then just kind of roll over. Netflix had a nice day. Deep move lower, down to 524, which was a level that we had. It was the bottom of this gap. Support, resistance, support, support. Recaptured it. Then you got a nice move higher. So now today, 545 is your pivot. As long as it holds above, I think you can look for $10 higher. But if it fails, I think you're looking for $10 lower. So I think that those are the active pivots on Netflix. Now, just quickly, this is DJUSSW. This is the Dow Jones Software Industrial Group. And this is an aggregate of, you know, the whole software sector. And you can see that price has come down to tag this trendline support level, and where we've seen a lot of weakness in these high-flying names, right? So, you know, I don't know where we ended up yesterday. Let's see. 46. So we're right here above the 50. Keep an eye on software. If you see this breakdown below, then just like, any other thing, you're going to be looking, more towards the 200 for a test. So been a lot of weakness in that area. And here's a setup that I want to give you. This is Adobe. Big trading range from 450 to 510. And just yesterday, tagged the 200. Now, if you had been focused on it, and that was, like one of your stocks in your watch list, you could have bought the 200. You got a good bounce off of that. But let's say you weren't paying close attention to it. Now, you can set your alarm back here just below 450. And so if that ever triggers, that's your very objective short, because you would have lost the trading range, $60 trading range, and then you'd be below the 200 as well. I think you'd be coming back in here to 390, which is your measured move target. You probably get a little bounce here at 420 where there's some support, but big trading range to watch. And if you're bullish and things firm up and you get a back test of 450 that holds, you can buy that. So that's just one little setup for you to add to your watch list if you're interested. So let's wrap it up here. We're 25 minutes in. It'll be really interesting today to see how price reacts after yesterday's volatile day. Price did what it had to do. I mean, it took a deep look below, and then the bulls stepped in, buying that dip, got rewarded for it with a nice gap fill. Now we got to gauge where it goes from here. Don't forget, Powell is back on the Hill at 10 a.m. this morning with I think he talked to the Senate yesterday, and now today will be the House. So I saw some commentary yesterday that, Powell saved the market and all this stuff. I'm not so sure about that. I mean, it didn't go down, so that was remarkable in itself because, like I said yesterday, the market usually hasn't been very forgiving to Powell on his speeches. So that was that. So let's stay nimble here. Let's watch interest rates, watch the dollar, watch the cyclicals and value on the reopening trade, and let's watch tech, because that's where a lot of the softness has been emanating from with the big NASDAQ market leading names, the FATMAAN names, FANG plus Tesla, if you will, and a lot of the bubble stocks. Keep an eye on ARK. Keep an eye on Kathy Wood. She's the maven now, and she can move markets with the stuff that she buys and the stuff that she sells. So there's some guys in the trading room that have been really good with that, paying a lot closer attention than I have, and I think it's paid good dividends for them. And she publishes all her trades every night. So kudos to her, very transparent. She lets you know what she's doing. And that's a self-fulfilling feedback loop, right? If she tells you tonight that she bought today and people follow her, they're going to pile in and drive whatever she just bought higher. So that's smart. So keep an eye on that if you're interested. Stay loose and flexible. Let's not get out over our skis just because they filled the gap yesterday. So if you found the information helpful, please hit the subscribe button and the alarm bell. You'll get notified, and even pass the link along to somebody in your trading group that may be well served by the information. I'd like to think my levels are pretty close to being spot on. And I think they'll help you in terms of your execution of your active trading. You can look over in the show notes for places to visit the blog site for helpful articles and to register for my content. If you do that, You'll get an invite link to our trading room, and also you'll get a nice little email each and every time I publish content, so you won't miss a thing. And we'd certainly be glad to have you. So have a good day of trading this morning. If I see anything consequential, I'll reach out midday and let you know what I see. But until then, have a good start to your morning. This has been Chris Buss with Traders Profit Compass. Talk to you next time.